Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 2nd of September 2019, and we're briefly looking at Argentina and asking, are there any lessons to be learned? So let's take a look. Argentina is in a mess. Now we know that won't surprise many because its recent history has been an entire mess, at least financially. Since independence from Spain in 1816, the country has defaulted on its debt 8 times, and inflation has often been in double digits, even as high as 5,000%, resulting in several large currency devaluations. Argentina has much fertile land, and its agriculture has been to a large extent its economic comparative advantage. In the early 1900s, for example, it outgrew Canada and Australia in population, total income, and per capita income. And by 1913, it was the world's 10th wealthiest state per capita. So what happened? Well, some would argue that the rot set in 1930, when a military junta took power, ending 70 years of civilian constitutional government, causing considerable political instability. Since then, Argentina has had a number of successive governments and presidents with varying degrees of success and failure. The current president is Mauricio Macri, who has held office since 2015 and was elected on promises to boost Argentina's economy with a raft of liberal economic reforms. Yesterday, Argentina imposed currency controls in a bid to stabilize markets as the country faces a deepening financial crisis. The sharp fall in the peso has resulted in the government restricting foreign currency purchases. Firms will have to seek central bank permission to sell pesos, to buy foreign currency, and to make transfers abroad. Argentina is also seeking to defer debt payments to the International Monetary Fund to deal with the crisis via debt restructuring and extension of maturities. In an official bulletin issued on Sunday, the government said that it was necessary to adopt, quote, a series of extraordinary measures to ensure the normal functioning of the economy, to sustain the level of activity and employment, and protect consumers, unquote. The central bank said the measures were necessary to, quote, maintain currency stability. It also said that while individuals can continue to buy US dollars, they will need to seek permission to purchase more than $10,000 worth a month. The prime cause of this is the president's defeat in a recent primary poll, which suggests he may be ousted in elections due in October, and this led to the peso falling to a record low last month. To put the country's finances into perspective, it has an inflation level of 22%. Its economy contracted by just under 6% in the first quarter of 2019 after a 2.5% reduction last year. And 3 million people have fallen into poverty out of a population of 45 million. It is estimated that Argentina holds some 55 tons of gold, approximately 6 tons off its high, but considerably more than its low in the past 20 years. But there is no doubt that to prop up the peso, the central bank will rapidly eat through its reserves, having already spent $1 billion since last Wednesday with little effect. Though there is a $57 billion standby agreement with the IMF, of which a spokesman has officially declared, quote, staff will remain in close contact with the authorities in the period ahead, and the fund will continue to stand with Argentina during these challenging times, unquote. So, what lessons can be gleaned from the Argentinian experience? Well, any perceived lessons translated from Argentina should be taken with a grain of salt, as no two crises are the same. But in simple terms, there were underlying structural problems which needed to be remedied, including the need for labour reforms, improving federal-provincial relationships, and the avoidance of cronyism, which was rampant. Also, debt levels should have been kept in check, even when there were relatively high levels of economic growth. This was not done. And also Argentina shows us the danger of relying on fickle foreign capital flows. It did not heed the lessons from the oil crises of the 1970s, choosing to support their fiscal deficit with external financing. The problem with this, of course, is that as soon as a crisis looms large, such foreign capital is often quick to exit the marketplace. What we also wish to point out, though, is that although Argentina has been on a gold buying spree, which one would have hoped could support its currency, 55 tons is simply nowhere near enough. And this we will find with most economies, in that at current prices at least, virtually no country, no matter how aggressive their gold buying has been, has enough to support their currency and external debts combined. This is why the likes of Jim Rickards advocates that even with around 20 to 25% currency support, one would need at least $10,000 an ounce gold. Whether one day this will be achieved, we shall have to wait and see. But we shall be interested in your views. So please do share. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.